In my last video, I talked about how NIO is on a crossroads of either turning around the Invest story on its own by breaking even in Q4 or having to seek alternative solutions, which would likely include divesting of some of its key assets. I talked about how NIO was recently hiring a key person to take on this job, and we saw NIO preparing for the worst case, a potential restructuring. But there is not much known about the potential implications for both institutionals and retail investors in this Plan B scenario. So this is what I think is holding people back from investing in NIO stock. In this video, I tell you what I think NIO should do about it. But before that, let's add some context here. Let's talk about valuation. Right now, NIO is trading like a legacy OEM with a debt problem. Its price to sales ratio is around 1 or less, but that is not what NIO is. NIO is a tech company, a company that should be valued as a tech company. It's a hardware company sprinkled with tech on top. Think about it, we've got SkyOS, it's an operating system that's removing all of the middlemen. That's something every legacy automaker wants to have. It's developing their own chips, 5 nanometers tech. It's having ventures like Clear Motion, the suspension that we saw introduced with the ET9. It's having proprietary battery swap networks and charging infrastructure that is really world-beating, and it has its own autonomy stack with both software and hardware, and NIO's own approach with the NIO World model. It also has lots of various services and the lifestyle ecosystem. All of that are things that no legacy OEM has, and that's why NIO, of course, deserves a tech multiple and not such distressed asset valuation, right? So that's kind of the whole bigger picture here. And if that going concern fades, I think public capital markets are, more serious about this valuation as a tech company and could give it price to sales ratios that we see with other companies like 3x for XPeng, 10x even for Tesla, depending on its growth momentum and the market narrative around each of these companies. So, the upside here would be 3x, 10x just on a revaluation of NIO according to where they should be and where everybody else is. But of course, in order to unlock this growth, NIO needs to really deal with the fundamental situation, but also really get the stock story back on track. And I think therefore NIO really needs to rethink their approach and could take the following measures. So what I think NIO should do is they should announce and initiate a primary listing in Hong Kong. Yes, NIO already has a secondary listing in Hong Kong, but it's time to go further. A primary listing would really send a strong signal for long-term commitment to the public markets. It would increase access to mainland Chinese institutional capital via the Stock Connect. So think of all of those people who are currently Chinese and not able to get their money outside and not able to invest in a US-listed ADR. That's still the case for NIO and definitely for the institutional investors, right? So that needs to be unlocked. Also think about my previous videos about the long-term potential of China building up its 401k-like structure. Plus, we see the Chinese markets are currently even outperforming US markets. And so, all of that capital inflow is currently missing to NIO. And a primary listing in Hong Kong would resolve that in a way. Now, it would also reassure global investors that NIO intends to remain a globally visible and tradable company. And I think that's really a key ingredient of NIO's brand. They are a global company and to start with. And so, they really should signal that to capital markets as well. They should not quietly prepare for privatization or shadow restructuring or such bad ways of executing this Plan B scenario, which may or may not actually be resolved in a way that's friendly to current shareholders, right? We don't know. So that's the case, sending the signal here. If you go to the Hong Kong listing as a primary listing, then this also signals that you're not working on all of those shadow type of things in the background that would be not to the benefits of shareholders. And it would also increase the optionality for future capital raises outside of New York Stock Exchange. And more on that later. It would also offer protection in the case of geopolitical tensions. I mean, we've had that for a couple of years now, and always with Trump's in a trade war and stuff, there are back and forth, right? And sometimes we get these delisting rumors again and such, but if there is a primary Hong Kong listing, then that's totally off the table. I mean, currently it's theoretically also not an issue, but you know, it would be just another nail in the coffin of this fear, uncertainty, and doubt narrative there. And it would also address a more subtle, but I think a more critical problem, NIO's reputation. Li Bin himself has stated that negative sentiment and coordinated online attacks are scaring off potential buyers. So people are asking, will this company survive? Should I really buy a NIO car now? What's going on? How is the future looking of this company, right? So this makes capital markets strategy a branding tool and even a consumer-facing tool, right? So a rising stock price, clearer shareholder alignment, and credible Hong Kong listing can really reverse the psychology, rebuilding confidence, increasing car sales, I think, and reinforcing NIO's market positioning. So that in turn becomes a self-fulfilling prophecy at some point if, you know, everything starts working together again how it should. Currently it's actually the other way around. It's a death spiral, right? And they need to, you know, get out of that. So that's my outcome basically to this person, this new NIO Capital market manager, Mr. Angelov. So he's in a very unique position. You're the one managing a cap table. You can manage the narrative, the trust between Li Bin's original vision, China's sovereignty priorities, and Abu Dhabi's / CYVN's strategic aims. I mean, of course, they'll have big say. They are a 20% shareholder. They may have their own thoughts. So, you know, in this triangle, he needs to manage that. And we as the capital markets holders, like the retail investors, which I think is the biggest story in there right now, as institutions have largely sold off, we are the most important part of the sentiment, and he can manage that sentiment if he leads with confidence. So I think he should clarify really and reach out what's being built for retail investors and value capturing here, not just for what's his role in the internal restructuring, which we get through the news, right? We want to know what's the path for new capital to come in without sacrificing the public shareholder base with those of us, the retail investors, and the previous or still existing institutional investor base, and how a primary Hong Kong listing could actually change the game by reconnecting NIO with the regional capital and also the institutional capital that I think is waiting on the sidelines until we get more clarity, or the fundamental story has finally shifted as well. Plus also the retail investors that are frankly worried about this current situation. So a stronger stock price, I do think is really not just a vanity metric, but a marketing weapon for a company that's under attack both online and in the showrooms. And it's now not the time for losing and waiting and being passive. No, it's really the time to bring out everything that you've got, and retail really wants to be part of the upside story, which I mentioned before, the valuation potential increase, and doesn't want to be the exit strategy scenario. And that needs to be, I think, clarified from the company side, in my opinion. So I think if NIO is pursuing that strategy and actually doing a primary listing in Hong Kong, I'm not sure if there would be clear signs. I'm not entirely sure how long that would take, but there might be some signs like a board level solution and the appointment of some local advisors and stuff that we could observe, or also an official application. But of course, NIO could also come out and publicly state something, right? Or this person, this NIO Capital manager, who I think this is part of his work. He's been hired for something like this. He could be the one communicating to the outside world, because clearly, the investors relations team and also the public relations team, they're not doing that. Okay, so this new person could do that, and this such an announcement, I believe, would be a major catalyst for the share price. It would be a signal for regional capital markets integration, investor-oriented governance, and it will also undercut the lingering narrative that NIO is drifting towards delisting or disintegration, all of that. So maybe one more key benefit here would be that future capital raises would become even more credible and manageable. I mean, that's far out in the future, but let's say NIO makes that signal, stock price recovers to a more tech-oriented valuation, and also the fundamentals improve, everything's going like the right way and stuff. At some point, even if they are breaking even in Q4, they may not even achieve full year profitability without tapping more into financing. That might be the case. I don't know if that's the case. I think there is a scenario in which that's the case, but in the future, they may still want to tap markets or fund growth in a positive manner, right? So far, we always had, oh my God, dilution. But I think institutional investors are not fundamentally against dilution, but they demand that it's happening in a transparent, value accretive, and also part of a clear, in such a way, and also that it's part of a clear roadmap. And so if NIO really shows that they're turning the corner like they are doing currently with the L90 and other news, then investors like to be investing in growth, even if they are doing moderate capital raises in the future. I think they won't be feared anymore. They will be welcomed as a part of a controlled growth strategy, and that creates a vicious cycle of confidence, investments, operational scale at a better valuation, and so on. And this is kind of where I'm betting on that this will be happening, and where I hope that NIO really does the right moves. So this is just my personal opinion, how things are currently, what they should do. Let me know in the comments what you think about that. I hope if you're working for NIO or so on internally and you've got a say, send it to the persons who are in charge. And I think also for Li Bin, this is a very, very important thing, because he cannot go on doing like he has done in the past. And he definitely knows that, right? And so currently everything's heading more towards plan A than plan B. And that's good, but still, we need more clarity on some of those things, and NIO has it in their hand. They can send the right signals. So that's my video for now. Thanks for watching. Please smash a like, share it, and see you in my next videos.